Hello everyone, welcome to this week's weekly market review for Monday the 8th of January to Friday the 12th of January 2024. My name is Vishal. Let's get started. All right, first up, we're going to start off with the Nifty monthly chart, and as we can clearly see, after the market has made an all-time high, there is a new level of demand which is created on the monthly chart. The levels are 19,858 to 18,835. This month has started a little bit on the negative side. Today also we did see a significant fall or a corrective move in the market, but that could also possibly mean that prices are a little expensive as of now, and maybe the market is due for a little bit of correction before it continues its trend to the upside. Let's move on to the weekly chart now, and if you look at the weekly chart, we've started the week on a pretty bearish note, to say so, but this is what we see on the weekly chart. This is that rally-based rally. Prices might tend to go a little bit deeper, and in case if they are unable to sustain this, then we might see a little bit of a deeper correction. So right now, this is your key level of demand, which is this rally-based rally. And of course, markets are pretty far away. Let's move on to the daily chart just to see if there is something interesting here. So on the daily chart, we had this strong pivot. Then after that, we had a very, very strong move to the upside. And right now, we can clearly see that prices are unable to cross this particular handle over here. So 21,800 has been a little bit of a very, very strong resistance for the market to break and move to the upside. So this has been happening since quite a few weeks now, or rather to say quite a few days. And if you look at this level, 21,841, so this is your supply zone at the moment. And if you look at the level of demand, we have one level of demand here, which is right below this gap. Prices have come here once, and there is a possibility that if they retrace back towards this 20,950 handle, then we might again move a little bit into a sideways or a consolidated market. Okay, so right now these are the two key levels: 21,660 to 21,841 and 20,950 to 20,775 on the daily chart. All right, let's move on to the next index. We are going to have a look at Nifty Bank. So let's wait for the charts to load of Bank Nifty. Let's do that here. And yeah, let's start off with the monthly chart. So let's go to the monthly chart. So monthly is also showing a little bit of a corrective move. Right now we have this monthly level of demand, 44,600 odd levels to 42,150 on the monthly time frame. If you go on to the weekly chart, there is no close level of demand here. The closest level of demand is a little far away from current market price. And if for some reason the market does give a little bit of a deeper correction, then we might see these levels coming back for a re-entry into this market. So keep a close watch on the weekly chart. And on the daily chart, we have all this consolidation. Now, I'm just going to connect this line over here. And what the market is trying to do is it's trying to respect this trend line here. Any break below this or a close below this will probably create more selling pressure. The closest level of demand on the chart is at 44,950 to 44,278. So keep a close watch on this. And as the Nifty has created a level of supply, we are potentially seeing a new level of supply develop on Bank Nifty. But of course, it's too early to say that, because in case if the prices do hold on to this trend line, then it might eventually even continue to move up, and it might probably give a surprise reversal to the upside, taking out this level of supply. Okay, so unless and until the prices do break and give a substantial close below this trend line here, it's too early to say that the markets are going to be correcting and correcting very, very strongly. But if that happens, then yes, markets can correct and move to the downside very strong. All right, let's move on to the next index. We are going to be looking at the Fin Nifty, or also known as the Nifty Financial Services. So let's quickly do Nifty Financial Services here. Let's load the chart. And let's quickly have a look at the Nifty Financial Services. So on the Nifty Financial Services, very similar to the Bank Nifty, monthly level of demand zone is still intact. Today we had a negative move on the market. If you look at the demand zone here, nice strong rally-based rally demand zone, 19,826 to 19,385. If we move on to the daily chart, this daily level of demand is holding. And right now, there is a possibility that we might see this level getting tested once again. Now, what is important for us to know is that just like the Nifty, where the 21,800 level is a little difficult to break to the upside, Fin Nifty is also having the same challenge. So it's unable to break the 21,600 level on a closing basis. And due to the same, it might just consolidate here. Now, if the 20,900 level breaks on a closing basis, then we are going to see a little bit of a deeper corrective move. And the next level of demand is at 20,087 to 19,933 on the Nifty Financial Services chart. All right, let's move on to the next market here. We are going to be looking at the USD INR. So let's quickly have a look at the USD INR. And let's... Okay, so the USD INR now on the monthly chart is just consolidating for many months, showed a little bit of up move, but now again moving a little bit sideways. If you look at the weekly chart, so prices are holding on to this weekly level of supply, which we had plotted last week as well. And as I said, unless 83.44 breaks to the upside, the USD INR is going to find it very difficult to move to the upside. So for the week right now, it's probably moving into this consolidation phase where this is going to be a key support for the USD INR, 82 odd levels. And in case if the market does even want to push to the upside, then we have this gap rally-based drop supply zone at 83.37 to 83.43 odd levels. So again, nothing trending on the USD INR. It's more of a consolidation or a sideways market. Let's now quickly have a look at the India VIX and let us gauge what the India VIX is suggesting as. So let's look at the India VIX. And the India VIX is currently trading at 13.46 odd levels. And we had a nice move into this supply zone. Volatility did shoot strongly to the upside. Today, we had a little bit of a volatility increase, obviously because the markets fall, so volatility tends to rise. Now, we do have all this noise here. So this is a level of demand now, 1229 to 1076. So obviously when the market has come here once, the market has moved to the upside. So in case if volatility tends to increase, then we might see the India VIX first moving towards this level over here, which is 14.5 to 15. And then in case if the volatility still increases further up, then we are going to see these levels getting tested once again. So let's keep a close watch on 16.77 to 19.39, okay, because now this level is already breached. So we have to now mark the above level. All right, let's quickly have a look at the upcoming stocks, which are most likely to move in a volatile way. That's also because of the reason that earnings are going to be announced. So let's quickly have a look at those stocks. This week, we are going to be looking at two stocks, and they are the IT heavyweights, Infosys and TCS. So let's start off with Infosys first, and let's try to look at some key levels on Infosys. And then we'll also look at TCS. So let's quickly see what's happening on Infosys. So on Infosys, this is your monthly chart. Prices have more or less reversed from a level of demand, maybe not on the monthly chart, but maybe somewhere on the weekly chart. And now somehow on the weekly chart, Infosys is finding difficult to break and cross these levels. Okay, so right now, if the results are coming closer and they're just maybe 3 days away from announcement, we might tend to see a little bit of a strong volatile move coming into Infosys. The first key level of demand is going to be 1463 to 1434. So this is going to be a key level to watch out for. So if prices do come back into this level, we might see a bounce or a possible bounce coming in. And if that happens, then obviously the first target for Infosys will be around 1593 odd levels. So let's keep a close watch on 1463, 1434 on Infosys. Let's move on to the next stock, which is TCS. And let's quickly look at TCS. So we'll just wait for the charts to load. Okay, so TCS has been also in a pretty strong trend. In fact, it's been in a slightly more stronger trend than Infosys. But now, as we can see that there have been 1, 2, 3, and nearly the fourth week is also indicating that the market wants to correct. And maybe this is either profit booking before earnings or maybe something that we are unaware about. But as we look at the chart of TCS right now, it's very, very similar to the chart of Infosys. We have this key level over here of demand and this gap level over here. So it'll be interesting to see what happens here. And in case if this level doesn't tend to play out, and if the markets do correct, then we have one more level of demand, which is here. So these are the two key levels of demand on TCS: 3627 to 3562 and 3541 to 3496. So pretty much this is the analysis for the week. I hope you enjoyed the analysis. And if you do like our analysis, please give your valuable comments in the chat box. And definitely let us know what would you like to see in the upcoming video. Thank you so much, everyone. Have a safe trading week. Take care and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.